With both the Hang Seng Index and Alibaba shares particularly bettered in the month of November, put warrants over the HSI and Alibaba made estimated returns of up to 80% to 141% respectively during the month. See how put warrants work and how you might use warrants to trade potential moves amid the rising volatility. Hi, I'm Jamie from Macquarie Warrants, and I'm here to share with you some highlights of the market action last month and how you could have used warrants to capture some of these moves. November saw Chinese tech companies turn in their third quarter earnings report cards after a series of Chinese regulations, including anti-monopoly measures. Of them, Alibaba was among some of the worst hit, both in revenues and share price sell-down. With revenues missing street estimates for a second straight quarter and a trimmed 2022 revenue outlook, Alibaba's share price sunk more than 10% the morning after its earnings results. It is down 24.7% for the month of November to fresh record lows. On the back of the share price tumble, Macquarie's Alibaba put warrant XDSW rallied 142%. While Chinese regulations negatively impacted tech giants like Alibaba, it boosted smaller rivals like JD.com. Announcing its third quarter earnings on the same day, JD.com reported improving revenues that beat street estimates, while its Singles Day sales jumped 29%, outpacing the 8.5% increase that Alibaba saw for its 11 November sales revenue. JD.com's share price gained 9% post-earnings and was up 9.5% in the month of November. Consequently, Macquarie's call warrant RNRW over JD.com tracked the stock to be up 39.5% for the month. Disappointing earnings results from other tech giants such as Tencent, Baidu, and Xiaomi weighed on the Hong Kong benchmark HSI. The HSI December futures fell 7.2%, underperforming regional indices in the month of November. Hang Seng put warrant NLHW returned 80% on the 7.2% drop. Aside from a lackluster earnings results season, the HSI alongside global indices had to grapple with the latest twist to the pandemic situation, the emergence of the Omicron variant. Airline stocks like SIA, which had climbed in the beginning of November on Singapore's introduction of the VTL, soon pared all gains to be down 6.4% for the month. SIA call warrants lost 92.3%. Glove names such as Top Glove, on the other hand, spiked 43% in the 2 days on the Omicron news. Macquarie listed a new Top Glove call warrant on the last day of November. Through these highlights, we can see that there were trading opportunities via both call and put warrants for investors in the month of November. Investors keen to trade on further short-term moves in any of the above-mentioned names may consider doing so via Macquarie's Alibaba, JD.com, and Hang Seng warrants, which allow investors to go both long or short. So what are warrants? Call warrants move in line with the underlying they follow, meaning if the underlying stock or index went up, so will the call warrants. Put warrants move inversely from the underlying and will increase in price when the underlying stock or index falls. Here's a table to illustrate how Hang Seng call warrant B0YW and put warrant NLHW performed in the month of November. The call warrant, which had cost 21 cents, fell to 4.1 cents, a 80.5% drop, when the Hang Seng Index futures lost 7.2% to trade below the 24,000 level. Investors should note that Hang Seng warrants do not track the cash index, but rather the Hang Seng Index futures, for which you can find the prices available on our homepage at www.warrants.com.sg. The Hang Seng put warrant, however, gained 72% from 12.5 cents on 29th of October to 21.5 Singapore cents, providing magnified gains which would have helped investors wanting to hedge against a sudden drop in the markets. How much more warrants move, given a move in the underlying price in the short term, depends on their respective effective gearing levels. In this case, both Hang Seng warrants moved approximately 12 times more than the Hang Seng Futures Index's movement. Say if a warrant had an effective gearing of 10 times, it means the warrant will move around 10% for every 1% move in the underlying share or index it tracks. The gearing effect is one of the reasons that make warrants popular. But note that gearing can work both ways, meaning warrants will also move in a bigger magnitude or percentage than the percentage move in the underlying should you get your view wrong. To estimate how much you should be investing into warrants, you can use effective gearing as a guide. As an example, for a shareholder with $100,000 worth of XYZ shares in the portfolio and wishes to hedge against a short-term downside move in the shares, can consider a put warrant. If this put warrant has a 10 times gearing, the gearing levels can be seen on our website. The shareholder needs only to invest into the put warrant an amount that is 10 times less than his share exposure of $100,000. That is, the XYZ shareholder can buy $10,000 worth of this put warrant. For further details on trading warrants, and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by scanning the QR codes and subscribing to our channels on YouTube, Telegram, and Facebook.